Here's why market takes your stop loss most of the time. First of all, you need to understand the dynamics of the asset you're trading. In a general situation, here we can see a downtrend. So what most retail traders will be doing is once market breaks below the support, they will wait for a retracement to it as a resistance and look to short it from here, expecting the price to go down. However, this is not always the case. We might see different situations where the market retraces a little bit from that resistance and then goes up hitting your stop loss, and it continues going up where we find another resistance, and then retail traders, as an obvious impact or a reaction, they would be selling from here to expecting the price to go down. However, it could also go up and take liquidity. So what should you do as a trader to become better at taking trades? So first thing you could do is wait for a possible liquidation, and then if market makes a pressure to the downside by whatever types of confirmation, here is where you want to go for a short position, basically targeting a new lower low or a possible movement to the same low again. How can you expect whether market is actually going to take liquidity or just retrace from that previous resistance? Well, this relies on multiple factors, including trend phase, volume, and momentum. In order for you to understand all of these, you will need more experience and practice. Come pay us a visit at Zylostar and we'll show you how things are done.